The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman. This is the Tiger Technicians Hour on this Tuesday the 11th of February. God, it feels like we're really way into February. Dow's down 148 at 44,328. What I discussed with my subscribers to the opening call was that this particular pattern here, let me see if I can find it. I should be able to find it right there. Okay, yep, here it is. A pattern I nicknamed way back 20 years ago, the dreaded H, mostly because the monthly chart of, I think it was Newmont Mining, was making a peak D in the monthly chart, and we folded, we started to come down and made this arch formation and then took out the left side low, and that was it. It came down tumbling. It was 2003, wasn't it? I think something like that. Anyway, so this is I look at three core patterns, straight up, straight down. That's one. Cup formation, 2. Arch formation, 3. You can get a combination of sharp down with an arch that fails at a peak A or a B, and if it takes out the left side low, you can do 1-to-1 of the arch to the downside. That's a particular pattern. The reverse Y, green, means that you go straight up and then you make a cup formation or a V-shaped formation. And if you take out that left side high, you can do almost a 1-to-1 to the upside. It's almost like the falling axe formation. I don't have to go through that right now. So what do we see right now? This is the pattern that I drew in. We went to a peak D in the Chapman wave. That's where other things can happen. We've seen that before. DE, around about there is where very often the Dow takes a bit of a dive. And we're looking at 45,054 under the 45,073 high of the 4th of December. We did that. Why did I not put the date in? I think it was the 28th and something like that, 29th of January. And we make this top, pull back, and we rallied, and we went once again underneath the previous high, and now we're arching over. And in this particular formation, if you go to a peak A or a B and you start to roll over, by the second to the third candle, that's the candle that usually accelerates sharply lower. If it doesn't, it means you can make a lowercase h that goes to a lowercase m formation. But it also says there's a really good chance that the upside is extremely limited. One of the reasons why today we did take a position, a short side position in the Dow, but there are a couple of other reasons for that. And yes, we have the call long from the exact low of the 13th of January, but I think that this is kind of judicious, and the number of reasons being in the Dow, it's now become so loaded. It became loaded with financials at one point. Now it's really loaded with tech stocks, and almost all of those tech stocks are kind of struggling. Microsoft, I mean, even IBM made an all-time high, but it's taking a little bit of a pullback. So I'm looking at this and I'm saying there's a good chance that the upside is limited in the Dow. At this particular point, we haven't even broken down to the 43,800s, which is the low that was made back on the Monday a week ago. That was the deep sea low. So far, we're not even close to that. So this is a work in progress, and I'm just looking at it and saying, I don't see a big smash to the downside right now, because they are still, look at this, in the Dow. What is working all of a sudden is Coca-Cola. Coca-Cola, huge move up, 3.5%, up $2.34 at 66.88, tootling along the 200-period moving average at about 64 yesterday, and whoosh today, big move to the upside. So that's exactly what I'm expecting, that there are sudden whooshes to the upside and whooshes, not W-I-S-H, but W-H-O-O-S-H to the upside and to the downside. So it's kind of a little bit more than an insurance play. It's more like a trend, but not a serious one at this particular point. So with that said, let's go back to our story. The S&P right now, the S&P is down from its intraday high of 6058. It's at 6050, holding quite nicely, down 16, but look at that 9-period moving average. Actually, the Dow, the 9 was still over the 14, so it's a work in progress. So yeah, there was a failed arch formation right there, the dreaded H, and we went lower, but within 2 bars, you closed above it. That's a good sign. You've done it again, and now we're going to see. I think the S&P is just kind of a sideways consolidation. I had been talking about this for something, it could be completely wrong, but I've been looking at this and saying, I think that when we go into January, we're going to start to see a move that goes February, maybe even to the usual March low. You know, March and October are very often in the market serious lows. I think there's a chance that we've got a March low. I hope it's a March low, not while I'm just out the office. Okay, so now what we're looking at is QQQ, Index 100, coming back a little bit from the intraday low of 525.83. Right now it's trading at 528.00. It's down $1.34. Look at that. This is a technique, another technique that I like to use. This is the Chapman Wave inside track repellent zone. In other words, I take the outer, let me just see if I can get that right to straighten it out. It irritates me if I see it a little bit incorrect. There we are. So I take the upper boundaries of the bar that includes the wick, the very tops most of the time, and then I take just like a 16th, a little bit more than a 16th, 330 seconds maybe below it, and I draw in a parallel line, and I call that the inside track. This is the inside track repellent zone. When you start to go above it, it becomes the propellant zone. But it's also the Chapman Wave falling axe formation, so that if there is a break to the upside, we can start measured moves, but we haven't gone there yet. That would probably start, and always you look to the left side peaks, and that would be this peak right here, which would take you to about 534. 534 would be very positive if by Friday we get there in the QQQ. So I need just to straighten that out. So it's the same thing. Fun enough, it's the weekly chart has the same pattern. The monthly chart has a slightly different pattern with 2 doji candles. Very serious doji candle right there. Look at the wick. You can just see wick. You hardly even see the open and close. And that's in December, the high of 539.15. Slightly lower low in January, which was 533.82. And now we've got so far a low of 530. So did I say 30? It should be 525. No, it's 532.10. 30. Okay. So in the meantime, it's a work in progress. IWM is different. IWM, the Russell 2000, struggling away, failed at a peak E, and is pulling back, but that 9-period moving average still shows some strength. The MACD is just as we're speaking, barely positive. The stochastic is pulling back sharply down to 64%. The on-balance volume is very weak. So, and the monthly chart has this pattern that could become a dreaded H. We're looking at it very closely. Let's go on. We want to look at the SMHs, semiconductors. As far as I'm concerned, they are not out the picture. They're never out the picture because the semiconductor chips are like the oil of the 1900s and the 2000s. So this is what fuels the economy. This is the other fuel. It's called technological fuel via semiconductors. So that's not going nowhere. But at this point, it is just stuck in a range. Jesus, that's a bell already. Okay, let's just do this. I want to show you the TLT. The TLT is the bonds. The bonds went to a peak E and then started to pull back. And so far, the 9's holding okay, but bonds are down 144 ticks at 88.56. That's a real struggle. And that means that yields are remaining in the upper range. We've got the Fed Powell talking today. We'll see what happens. Dow's down 122. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So let me do this before I forget. This is the FXI, the iShares China Large Cap ETF. Got a very look, it's pullback from exactly right on the 200, let me circle that. Right on the 200 period exponential moving average. I mean, what a nice technique, right? Boop. And we spoke about this just recently. I personally am not interested in China stocks right now. We've got enough to worry about here in the United States. So it's gone from 29 to 34. Not bad. So today it's at 33.39, peak C. It should go to a leg D. And I don't know if it's going to make the full recovery in the cup formation, but China is, in fact, working in kind of independently in its own trajectory in terms of what would happen with the tariffs, etc. So far, they kind of been able to ignore it. So all I can say is that the 32 level is key support, 32.30 to 32, right, 32. That's going to be key support, but it looks like it wants to get into the 34s. And that's going to help looking at this cup formation to try to get to the 37s. Can it do that if the general market, the U.S. market's weak? Yeah, it could independently. 37.50 was the high way back in October. So we'll see if that's a key. But most importantly, I would say today's Tuesday. By next Tuesday, in other words, a week from today, or maybe just a little bit more than a week from today, if not, you can't just hit it. It has to hold. If the FXI is holding about 35.50, that is a really good sign. Okay, that's that. Next question is Bitcoin. Yeah, Bitcoin is trading right now down 297,480. This is that same dreaded H pattern. Did a double top, 110,180 back in the 17th of December. And then in January, around about the 21st, it went to 110,945. That's almost like a big cup formation. But you can see the technicals were way weaker here, which is what I've been saying. Even though we are long, the IBIT, which is the iShares, for quite some time now, taking something off because you just have to do money management here. And this is the potential for the dreaded H. You've done the cup formation. Now look at the weekly charts. It would not surprise me at all if the Bitcoin takes a little bit more of a breather and it starts to test the 90,000 support. If it breaks 90,000 within the next week, that's a problem. It'll be like that for, I think, quite a few weeks. It'll be digesting these huge gains that it's had. That's Bitcoin. Silver, trading right now. Silver is up. Oh, it was up. Now it's down 20 cents at 32,280. Struggling. Unlike, I've been talking about this all the time, that there's this divergence between gold. The reason why gold is going up, I think it has to do more internationally, has to do with international countries. This is not the little old mutual funds and things. These are big. It looks to me from the on-balance volume, the way it's been moving up and the volume itself, these are big. These are countries that have been buying. So when this takes a bit of a breather, it could be initially very sharp, and then it might just go sideways for a little while. But I think we are very close to the 20. I would normally say if you're looking at millennium levels, then the 3,000 level should be 29.90s. Today we went to 29.68. 29.90s should be normally some kind of a resistance level. It could sneak above, but it's probably, if it goes back underneath, and at any point if gold it goes under 28.30, let's call it 2,800. It'll take a little bit more of a breather, but all the technicals are absolutely fabulous. But what's interesting is that the GDX and many of the gold stocks and certainly many of the silver stocks have not really participated like you think. If gold is moving up like this, you would think they would be 2x or 3x, and they're not. They've had a 10%, 12 or 15%. Look, the GDX makes a low of 33.42. Back on the 30th of December, 33.42, and yesterday's high was 42.21. That's a really nice percentage, absolutely. But when you think about what gold has done, look at the difference in the charts, right? Look, this middle one here is the weekly chart of the GDX, and here we go to gold itself. Look at that, all-time highs. Way above the left side high that was made back in the fall of last year. That was, I think, September. No, it was November. November, the week of the 1st, it went to 28.53. And look where it is now, much, much higher. So there's a big divergence. And I wanted to do this high-grade copper. So high-grade copper, we had a high-grade copper stock. We got quite nicely, and it actually screamed to the upside. But it gave it back a huge chunk today. We're out. We're out at 1%, 2% loss. I'm not messing around because these things are either going to work or they're going to fail. And when you're in this rectangle formation like the semiconductors, it means you're getting very close to what should be strong resistance and then come back into the middle part of the horizontal trading channel. That's the way I'm looking at it right now. But if you're looking at other areas, for instance, like let's go to steel. Let's go to the steel, the SLX, which is the ETF for steel. That's holding quite nicely. It's down 44 cents at, what is it? That's 62.92. It's gone to a leg D underneath the previous high that I thought was important, 65.15. It's just a candle. This is not a potential cup. It's the way I draw the cup formation sometimes, just to give clues. But it has until next week, which is the 19th. It has until the 19th. It's more than next week. It's it's a week and a little bit to get to the 65.15 area. This is because of the tariffs. That's really the only thing. The steel was not looking all that good before, so we'll see what happens there. Now let me get to a couple of questions immediately. So the first question, I wrote it down here, was, could I look at ESV? Wants to know if I could look at. Good grief, did I forget to write down what it was? Oh, MDT. MDT, this is Medtronic. I've been discussing it here for ages. Stock we once owned, we don't own it just briefly, but it's done really well. It was at a low in the 78 area just beginning of the year. It screams up to 92. It's pulling back. I like this very much. Let me just draw this in as a Chapman falling axe formation right there. Right there. One of my favorite patterns. But this particular pattern right here needs to go quickly to the upside. It's up. Medtronic is PLC. This is Medical Instruments, really a fine company. There are a whole bunch. I mean, Boston Scientific is the one that really has been soaring. Look at this. Boston Scientific, all-time high at 107.17 just 5 sessions ago. Medical Instruments, I don't want to go through all the others, but let's go back to MDT. Yeah, so you want to know about it. I like it very much. I'm calling this just for now an F rather than an A in the weekly chart. It's above the 200-period moving average. It's trying to treat that 89.51 200-period moving average as a springboard. It's a peak C, a leg C, because the month isn't finished in the monthly chart, which is not that great, but it's come off. 135.89 was the high in September 2021, and the 70, I should have typed that in, 68.84 was the low in October. 68.84, wow, of 2023. 68. I think I said 24. Anyway, so this is good. It's 26% or something move from the low, but I like it very much. And in this particular phase, if we start to see stocks like a Medtronic break to a new recovery high, in other words, get to the 93.80, 94.50 level, it'll say, hey, look, in this rotational aspect that I've been talking about for some time, a rotational corrective phase, this is working, and I like it very much. There was another one, I'll get to it in a moment. The Dow is down 84, and the S&P is down none. How do you like that?
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
So it's interesting that under these conditions, you've got the S&P, the futures are actually just down 7.75. Leg C in the 10-minute chart, leg C in the 5-minute chart. ABC. Well, what did I do there? That's wrong. That's a C, a D. It's a leg D right there in the 5-minute chart, and it's just gone to a leg E. Very interesting. And this is a very good action, I must say. So as I said, I think in the Dow, I could be completely wrong about this, but I think it's the weighting of really some of the tech sector that's really just kind of struggling, and you can see that's happening. So we've got MCK. So the question was, so MDT was in the medical device area. That's Medtronic. It was American. Now it's an Irish-owned company. Needs to break above this trend line right here. It really needs to make a gray B. In other words, over that high of 92.07 on the 5th of Feb to make it, I call it gray B. But the moment it takes out the high that was made just recently, the high that was made, the double Chapman wave 2-bar reversal from 93.08 on the 28th, to 92.98, that little turnaround there. If it can go to, I would say, if it can go to 93.50 in the next week and a half, that's going to say this is an area that's doing quite nicely, very specifically. And the other one that we were looking at was, a question came in about MCK. Could I also look at that? MCK is McKesson Core. It's a healthcare company, distributes pharmaceuticals, medical supplies, and health info. I've got a peak/B in the monthly chart. Everything's very technically good. It did make a V-shaped pattern, which is underneath the previous high. So that you can see that. It's almost like a kind of a lopsided cup and handle. It's almost like you spilt your tea right there. But it is working on this particular pattern. But all I can say is that it did make a peak F in the daily at about 612-ish, pulls back very sharply to the 570 level, and then within 4 sessions, it's popped back to today's high of 607.98. That is good action to try to get back there. It's like this Chapman wave Roman candle, this green Roman candle closed. So far, it's had 3 days after that high of being higher. That's really a big positive, and that makes this particular candle right here, that is the open. Now 598. So 598 is really key support for the next week, I'd say. But it's holding well. I don't know if it's breaking out, if it's got enough strength to break to either the high that was made back in November of, what have I got, 632.59, or the major high that was made, all-time high, that was made at 637.51 back in the week of 2nd of August. But it has very good support, and it's pulled back from the high today. It's down 24 cents, having hit 607. It's at 603. But I'm just saying that I think I would put that, if at any point in the next 2 sessions, I'm giving you a little bonus here, 2 sessions, if it's trading for 90 minutes under 594, be careful because it could drop quite a bit after that. I think it's holding quite well at this point. Next question came in. Did I type it in? Yes, I did. Basil, could you look at, where was it? Mr. Oz says, has anyone discussed any fundamental support for the underperformance of gold stocks, silver relative to the rip GC has had? I believe I heard a little bit of Tommy in the show, in his show, Morning Market Kickoff at 9. Fabulous show, folks. You should really get to listen to it because he does put the technicals together with the fundamentals really well. And so, yes, what I was saying is that it looked to me like it's international buying for the general consensus that markets are going to be under tremendous pressure because the countries kind of but don't really know what Trump is going to do. So there's a huge question mark, sitting out there, and as such, gold has become the favored medium as insurance. Think of it as an insurance play. Therefore, silver doesn't participate in the same way. The gold stocks don't necessarily participate in the same way because it has a specific focus right now. And that is, as I say, it's an insurance and it's big money that's in it. Okay, so the next question came in. Could I look at, where was it? Could you take a look at, White Shark wants to know, good morning, Basil. Could you take a look at TEM? I have a small position in it around 66-ish. Wanted to add, thank you. And yes. So Sharky, I've looked at this over and over again. I've loved it. And then I think I might have written it down. Then I lost that information. I forgot that Tempest AI Inc. is precision medicine, is diagnostics for oncology, cardiology, depression, just a whole bunch of things. And it's an IPO from earlier back in 2024, somewhere in July. It had a low of 22.89, opens at round number 40, and it's gone to a peak A and a peak B. And I have to put an up arrow, even though the stochastic hasn't even come into focus yet, because you have to have a certain number of bars before you can even get the slow stochastic. I like this very much. So I don't know, I know nothing about it, but in the area that they are participating in, it's not just the area, it's the way it's had these huge, from the 70s, it just plunges. And the last one went from the 70s to the 30s, and now it's back again. I love that kind of action because it's saying that there are concerted buyers, and that's really the most important thing right now, concerted buyers. And so where would you add? So you're in at the 66 level. It's trading right now at 74.59, up $6.12. Beautiful move. It actually hit 78.67. I think that we're in this choppy phase right now. And all I'm going to say is I'd have patience. I don't know if it's coming back to the 66 level yet. But what I would say is if you were in at 56, I'd have absolutely no problem saying to you, under 70, more towards the 68 area, I would add. But at 66 is a level that it was, look at this, yesterday's low was, in fact, 67.65. So I don't, look at the time sequence between the high that was made in Tempest AI, TEM is a symbol, trading at 74.48, up over 6. Look at this high that was made the week of the 23rd of August, and then it goes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and the 13th bar makes a new recovery, new all-time high of 79.49, and then you go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and we are just under. Look at the time sequence, and it says there's a chance that because when this goes to a new high, if it does that, I have to call that E/A because it never took out the stock. I'll have to talk about when we reach there. Now the Dow's down 33 and the S&P's down 6. They must like what Powell's saying. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hello, just to finish with Tempest AI Inc. TM. I love that entry that you got at the 66 level. If you hadn't been in that to me showed that, yes, all the technicals are very strong, and the technicals remain strong, even if there's a bit of a pullback here. So 66, I'd have to say watch it at 68, because at 66, now if you've got a fairly wide stop, my thinking right now is that the whole 64 area is going to be really critical on any pullback. 64 to 62. That means that you're 66, now you're at a loss. So I'm having trouble. All that I can say is a leg E. Everything technically is good except for the notation. Leg E could be an instant restart, but at this particular point, it looks to me, especially the way the candle is, Chapman wave inverted green Roman candle right now, that it does want to pull back a little bit into the 66, 64s. So I don't know if I would add right now. What I will say is this: if I would have probably recommended with a move from 66 to 78, I would have taken a little bit off, and if you had that little bit off, you might have done it. I would use that as a kitty, and I'd say, okay, I'm going to try to keep my 66 position. I'm prepared to go to 64, and then I have to make a decision. That's really the way I look at it right now. All I can say is that if by Friday it is tagged 80, 81, that's outstanding action. Now, as a trading position, if you want, you could get a trade. I would just a little bit under 71, maybe 70.30 to 69.80. I'd have a trading position. I'd have a tight 1.5 point stop. And if it starts to move strongly to the upside, I'll be able to keep that 66 as my call. And this is the trading position. And all you have to do is watch it, because all the technicals are positive, but it has these three rallies that go to it, to not a top, but so far it has been the resistance area just in the 79.80 area. I hope that helps you. But looking out long term, this is a stock that my eye says from the candles that we're looking at, this hasn't closed for the month, but if it had to close right now, my eye says this is a candle that says this is a stock that should go to 88 to 92 over the period of the coming 6 weeks or so. I hope that helped you. You did. Okay, great. You know my style. That's great. Now, the next thing what I'm going to say is there's another question. Oh, AIFF. AI off. It says AI. I can imagine what it's doing. Yep, there it is. Good eye, Dan. This is up. It's only up 83%. Oh, shame. 83%. Up 2.60 at 570. It was tootling along in the 330s just yesterday. Here it is at 570. Yeah, there's nothing to say. This is something that you've done your homework and you're looking for some kind of results that keep coming out, because it looks like a biotech. Some of the AI stocks are beginning to look like biotech. The way it looks right here, it looks like each one of the pops. I always say this about biotech. It looked from certainly the old days. I don't know if they still do it, but it looks like they used every rally to do either an option trade or something. Look at this. Look at that big pop, and then it fails. That's it. I think this is how they pay some of their workers, right? They watch it carefully. Okay, take something off. This is your monthly income. Boop, and it comes down again. So yeah, that's the way it looks. But so far, this is holding very well. AI, I don't know what it is. It's called something. Oh, it is a biotech. Is it? How am I going to read that? Firefly. Oh, this is Firefly. Neuroscience Inc. I can just barely see it. I need neuro glasses. A neuroscience. It is a biotech. That's it. Okay. Well, it looks like it and acts like it. Very nice. Congratulations on that. Next question is right here. Oh, it's for neuro research. So akin to biotech. Deal with NVDA. I'm not sure quite how that connects there. Okay. Next question came in. Okay, TM, good. All right, next question came in. Where was it over here? Could I look at the relationship of gold and what's it? Where did I put it? I typed it out. The relationship of gold stocks and the Bitcoin to your Robinhood. Oh man, that's a tough one. So this is just my own thinking. I put together a concept that said, if Bitcoin keeps rallying strongly, the Robinhood crowd love this kind of thing, and it should really help Robinhood. If gold keeps rallying, the Robinhood crowd with the small, low-priced gold stocks should also benefit. So what did Robinhood do today? Robinhood ran all the way yesterday to 59.98. I believe that was the high. Let me just check. 59.98. Oh, did I write 9 instead of 7? 57. Oh, 57.27. Oh, where did I get that from? It might have been a pre-market thing. 57.27. Yeah, I might have written a pre-market. And so we've taken a tad off again. One of the reasons is that Robinhood had an all-time high of round number 85. I can't say cascaded. It plummeted to the 6.81 level. So it comes out in August of 2021. June of 2022, it's trading at 6.81. It trades at 10, and a few months later in June, that's right, it goes to 6.81, and then it starts to move up. Doesn't ever take that low out. It makes the H that goes to a lowercase m to a third H pattern, and then it takes off. And it takes off, and it is trading, and it's gone from the sixes to 57.27. So we were very fortunate. I said that we've got to take something off today. We've taken a little bit off. We're in the 16s from the low that was made in August, right? Yeah, from the August, the day after the August low of 1398. So I've treated this as a kind of a compatriot of the kind of gold and the and the Bitcoin, but it also is independent. It has other things going for it. I think this is extremely toppy. It has earnings coming out tomorrow. If there's a big spike up tomorrow, I wouldn't be surprised if the following session, that is on Thursday when I'm not around, there's a pullback. It'll be great if it holds there. I'm just looking at this and I'm saying, wow, everything's so positive, but the unbalanced volume says, be a little careful here, but the stochastics at 91. So the question was about Robinhood, and the answer is, I think Robinhood is way overbought just in terms of momentum from where it's come. That whole area in the 40s, the breakout, it just skipped the 50s. I mean, the 50s was very brief. I think it goes back to the high 40s at some point, and that's where you can look at it again if you're looking to get in. But all I can say is that this is very good action. It is really good action. So we did take over 200% profit in a little part of it. I don't know what to do in terms of where the next entry would be, because it hasn't shown that it holds any pullback for more than a day or two. When it starts, when Robinhood, hood is the symbol, starts to make out of 3 sessions, 2 of the sessions have lower highs and lower lows, that says, okay, now it's digesting it. I'll be right back for the final segment. Basil Chapman, Tiger Emissions Hour. Dow is up 10. Woo-hoo.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Alibaba streamed it up 256 at 113.84. We're looking at this, and I said it's made a PT. Still looks good. The technicals have improved, and it's gone above the 200-period moving average. I think it should test the left side high and just sneak above it. That's 117.43. It should go to 117.45. It should go to 0.46 to start a leg D in the monthly chart. That's Alibaba. So let me just do this quickly because it's really important. So the E-mini, very strong. Leg C in the 10-minute chart, it should still go to a D. Today, I don't know what Powell's saying, but evidently the market must have been leaked, the information, because it's acting very well. So I had said that because of the tech sector struggling a little bit, let's see at Apple. Well, Apple's having 6 points today, up 7 points today. Well, it was looking poor yesterday. So I've been saying that because of the tech sector in the Dow, there's a chance that there's upside limited, and we're going to be looking at, does it make this arch formation? Well, if there's a strong move today, besides the fact that the arch, no, it's not a big move today. So far, it's up 23. We'll see where this goes, but in the number of bars, this is the bar that should have been the weakest, and because it's so far holding quite well, that means you've got maybe a sideways move. Means that I might have to modify everything. We've still got our triple long, but we did take a position today on the short side of the Dow. It was more protection than anything else, but it was also a trend because I thought there was a chance that there could be an arch formation that has Dow pulled back. So we'll modify that a little bit if we have to, but the other indices are all in the same kind of choppy side. And I think that February going into March is just going to be really choppy. Doesn't say we have to break down, but it'll be like a sideways consolidation with slightly lower highs and slightly lower lows. That's what I think right now. I'll be back tomorrow. Have a great day. Check out my opening call day newsletter. Stay tuned for Steve Rhodes.